Hello again, everyone. This is Jordan with a precious metals video market update. This is being recorded Friday afternoon, December 13th. This first chart, we look at all of the bear markets in gold's history. So we see 7 bear markets in the last 40 years or so. Couple observations. You'll find that crashes tend to happen very quickly, usually after 2 years or 2.5 years. And that was the case with the gold bubble crash from 1980 to 1982. Another comment is that bear markets are a function of price and time. So looking at price, the bear markets that are the most severe in terms of price, they tend to not last too long. Now, the bear markets that last long in terms of time tend to be much shorter as far as their severity and price. Now, this is the same chart. I just removed the 2 extreme bears, the bubble crash from 80 to 82, and also the 1987 to 93 bear, which was mild in terms of price, but lasted 5 years. As we can see, the current bear market in black is similar to all of these, potentially. It looks pretty similar to the 96 to 99 bear, but I think the comparisons really end there. I don't see any other similarities. Now, the key is to watch what happens in the next week or two, because if gold is to break below 1200 and make a new low in the next week or two, it's very likely that it's going to plunge to some sort of a final bottom. And when we get that plunge, it's going to look very similar to those 2 other bears that didn't last quite as long but plunged to a final bottom. Here's a chart of all the bear markets in silver dating back about 45 years. There's 8 bear markets. We did exclude one very mild one in the mid-90s. Again, as you can see, crashes happen very quickly. Silver crashed about 70% within 4 months, and it ended up declining almost 90% in 2.5 years or so. So let's remove that one and get a cleaner look at what's going on. Most of these bears look fairly similar. Again, as we can see, the bears that are less severe in terms of price tend to last the longest. And what's very interesting about the current bear is that at the late June bottom, it was actually the worst bear, or very close to being the worst bear in terms of price. And similar to what we said about gold, if silver makes a new low in the next week or two, odds are it's probably going to decline to some sort of a final bottom. It looks fairly close there to the 83 to 86 bear. And here's a chart that you've all probably seen before. This shows all the bear markets in gold stocks. The current bear is in black. Now, up until a few weeks ago, I was using the Huey Gold Bugs Index, but it turns out that the XAU, which I have in there now, is a much more appropriate comparison in regards to the Barron's Gold Mining Index, which I use for historical bear markets. As we can see here, the worst bear market was the one in 1980. That was a 72% decline. All of the other worst bear markets declined about 60% to 68%. The XAU did get a little bit of a bump this week, but at the close last week, it was down 64%. So, again, I probably sound like a broken record here, but if this thing declines just a little bit lower, makes a new low, at that point, I don't really know how you can argue otherwise that this bear market is over. So there you go. That's all for today. You can send me an email, check out my website, and sign up for my free newsletter. And you can also consider my premium service. Thank you all for listening.